Hey guys, welcome back to the channel. When is the best time to invest in anything, be it stocks or crypto? Well, some would argue that you should invest when you see a boom while others would say otherwise. Before we get into it, be sure to subscribe to our channel and hit the notification bell so you can get fresh content as soon as we upload. Also, make sure to check out the link in the description for my best recommendations when it comes to making money with cryptocurrency. Now let's get into it. Buy the dip is a tried and true strategy used by day traders and experienced investors. Buying the dip, also known as buying on the dip or buying the dips, is when you purchase an asset, usually a stock, at a lower price. The decline is supposed to be a one-time blip, and the asset's price will soon rise again. It's an opportunity to obtain an asset of great value at a reduced price, such as buying a product you've been itching to get at a 2-day sale. The catch is that there are no marketed limited time deals when it comes to investing. You never know whether or when the asset will start to appreciate again. Let's take a closer look at the specifics of purchasing the dip. Traders and investors who buy the dip on an asset, usually stock shares, assume that the asset's fundamentals are solid, implying that it will appreciate. When a stock's price drops, which can happen in a matter of minutes, hours, or days, they buy it at a lower price and profit when it resumes its upward trend. The price drop may be attributed to a number of factors. Perhaps a substantial number of institutional stockholders sold their holdings. Perhaps there was a new item that had a negative effect on the business or its industry. Perhaps the economy as a whole is down. The main argument is that the stock is supposed to bounce back and rise in value in the short or long run. When do you buy the dip? Unfortunately, there has never been a way to predict the market's bottom or the drop of a specific stock. Dips aren't calculated in terms of a single number or percentage. As a result, there is no one-size-fits-all method for determining when to buy the dip. Professional day traders evaluate share price fluctuations and plan to buy the dip using complicated techniques and technical study trends such as breakouts, reversals, and candlestick charts. There are, however, a few indicators that indicate a dip worth acting on. One happens when a stock receives favorable research analyst reports, and by recommendations, and its share price increases for a period of time as a result. What's known as an uptrend in technical terms. However, it unexpectedly changes direction. That would be a good time to buy it on the cheap. Assume a BC Incorporated. Stock is currently trading at $100. It has gradually risen to $150 in the last 2 months, based on its solid financials. And analysts expect it to hit $175 soon. The stock then drops to $140 over the next few days after opening low on one trading day. That's when an investor should buy the dip, sure that it's nothing more than a blip. A BC Incorporated stock should rebound and restart its upward trajectory towards the anticipated $175 level because nothing fundamental has changed. Cryptocurrency buying the dips. The simplest investing approach is to buy the dips. This does not mean you should go all in while an asset's price is falling. Rather, you should average in as it falls or purchase after it is stabilized. Furthermore, in a stagnant market or a bull market, where the conventional pattern is up or down, this technique is much better to use. To purchase the dips, one may do one or more of the following. As the price falls, purchase in small increments to build an average position, with the aim of buying more as the price falls further. Wait for the price to stabilize, and maybe even display signs of recovery before buying. Set lower priced buy orders, and wait for them to fill. Buying just before psychological levels, massive buy walls, and historic help levels is a particularly great method to follow. The green arrows show support levels, which could be purchased when prices were sunk to them. With that in mind, you could buy the big dips, or you could buy the small dips. You can complete the dips quickly to sell for profit, to create a long-term position, or to make an increasing profit. In all cases, the concept is identical and aims to buy when the price consolidates or corrects at a lower price, while buying into strength makes sense, especially in a bull market. Buying pullbacks is always a safer strategy than waiting to buy when a large number of people are rushingly buying at high prices. Following this crowd only exposes you to selling low under pressure. Buying the dips is superior to FOMO style buying at the top or panic style selling at the bottom. At the most basic level, this approach entails purchasing when the price is lower than the previous high. It entails analyzing maps, paying attention to short and long-term moving averages on various time scales, recognizing historical support levels, laddering buys, and putting stops at its most complex level. regardless of your level of expertise. The principle remains the same. We see a lot of small dips in crypto, and then major dips every few weeks or months. Depending on your investment plan, you might want to buy small or large dips. Little dips are perfect to buy if you're range trading. Larger dips can be rewarding for building a long position if you're a long-term investor. It's hard to predict the bottoms of those dips, of course. As a result, purchasing in small increments as the price drops can be helpful. The bottom line is that there are many ways to buy the dips. However, by purchasing while others are selling. All variations of this technique tend to purchase at low rates rather than high ones. This necessitates the application of some counterintuitive logic, as well as the management of emotions. To be more specific, one must set aside the uncertainty that comes with everybody selling at the same time during a market correction. Set aside the need to buy high because it seems that someone else is doing so. The strategy isn't guaranteed to succeed, but it is a wise and straightforward investment strategy that needs little expertise or technical knowledge to execute. Meanwhile, as previously mentioned, if you want to incorporate technical aspects, you can use moving averages, support levels, RSI, and volume to get a sense of how low a price could go and when a rebound is possible. In the past 7 days, ADA has dropped in value, and a lot of people are doubting if it is a good plan to hold ADA, and my answer is yes. And here is the reason why. On a bearish note, ADA was already trading at 3 cents at the start of January. In mid-February, the price hit 6 cents with some variations. Later on, the value of the coin began to dwindle. In March, the price fell to 2 cents as the crypto market collapsed due to the COVID-19 outbreak. The price rose steadily to 15 cents at the end of July, indicating a gradual recovery. By the end of September, the price had dropped to 7 cents. Furthermore, as Bitcoin's price began to increase, the price rose significantly to 17 cents at the end of November. ADA finished the year 2020 with a selling price of 17 cents, with several variations. Cardano is regarded as the Ethereum of Japan. It was created by Charles Hoskinson, the co-founder of Ethereum, and according to a survey, Japanese citizens own 95% of ALTCOINS. According to the most recent projections, ADA will begin to grow at the beginning of 2021. Throughout the year, Cardano will experience its highest value increase and may set a new all-time high. ADA could hit $10 by the end of 2021. The ADA will begin in 2022 at a price of $12. If it focuses on specific technologies and attracts more buyers, the price could hit new heights. Cardano could be worth about $22 by the end of 2022. Cardano will achieve greater success in 5 years or more as there are numerous collaborations and integrations planned. This would have a positive effect on ADA in the long run. In 5 years, the worth of Cardano could rise to $100. In conclusion, we are all very aware of the rise in Bitcoin in recent times and the possibility of crypto being explosive in a short period of time. So, is now the best time to invest in cryptos with potential? Probably yes. I say it's a risk worth taking. If you're looking to learn more about finance and investing topics like this, stay tuned for our next videos. Also, make sure to check out the link in the description for my best recommendations when it comes to making money with cryptocurrency. Don't forget to smash that like button, subscribe to the channel, and hit that notification bell so you don't miss out on anything. See you next time.